Hey guys, Matt here. So this video was supposed to be the Jiva one where I talk about earnings and all that fun stuff and what I want to see. However, we got some Fed news today that I kind of want to go over. I feel this sort of takes priority, and I want to take this opportunity since today it happens to be a really good day in my portfolio that I might as well make this the portfolio update before things go south, if they go south later this week. So let's do that right now. So as you can see right now, compared to previous week, I'm doing really, really well. Like I put $1,000 into my portfolio. I usually put $1,400, but this month I only put in $1,000 because I had to make some payments or whatever. So that's all I put. Everything else is just gains. Right now we are sitting at $65,729.36. We're sporting 33% gains, which is way up from last week. And then we got about 15,000 as far as profits. Halfway to 16K. So far, so good. We are doing really, really well. I'm really surprised. Jivo, I mean, now we'll talk about the Fed tapering and these stocks in a bit, but like Jivo, I'm up 20%. Like I mean, I can't be mad at that at all. Like for a stock that I've been struggling with for a while, we're doing really, really well, and I think Jivo's earned it. Now we'll see if it's really earned it next week during the earnings, but we'll talk about that in another video. Hyliion, it's on its way up, but, it's obviously got a long ways to go. But, it's getting there, and we'll see if next week during its earnings, we'll see if we, see any good news. We got Intel clawing its way up. It had some drop-off due to the earnings, but it's slowly clawing its way up. We got FedEx here. Now, I mentioned in a few, about a month or so ago that FedEx was one of my top priorities because the stock dropped massively. And, it has dropped massively over the past couple months. However, I mean, the stock price is stabilized and we're sporting, some minor gains now. So, although I was able to, buy a few shares thanks to the drop off, the price is stabilized. So, I'm not really interested in buying more unless it drops again. So, I'm comfortable with where I'm at. AT&T and Verizon, those are still down. Those are my only down positions other than Hyliion. I will keep nibbling off shares of AT&T here and there, but I kind of want to focus more on my Verizon because I still want to hedge it just in case my, bet on AT&T goes south. I still want to be able to, have some gains in Verizon and be able to funnel some money from one to the other if, like I said, things go south. We got Qualcomm and Revolve having earnings literally right now. Now, I'm obviously not listening to it because I'm filming this video, but once I'm done later this week, I will check out the earnings and see what happens. But just as an initial, look through, like Revolve is doing really well as far as net sales. We're talking about 62%, year-over-year change. Net income dropped as well as net cash and free cash flow. So that is something I'm going to have to look at. However, if we go to net income, we can see that, now I'm not going to read all this, but basically the point is that it's down because they were, they dramatically increased their investments in brand marketing initiatives. So out of all the reasons to be down net income, despite being up as far as revenue, that's probably the best reason I could think of. But again, I'll have to listen to the earnings call and I'll have to check out their 10Q once they release that. However, as far as just the earnings preview. So far, they're doing so far. They seem to be doing really well, and I guess we don't know. The thing with Revolve is that, especially the past couple of quarters, is that no matter how well they do, the price always drops off 20% or so, and then it climbs back up. So for it to be up this much, I'm okay. I'm pleasantly surprised. And then we got Qualcomm, which I haven't checked out their earnings yet, but they seem to be doing really, really well. Now, on to the news of today. And I gotta say, I mean, a spoiler alert, I've never been happier to be wrong about something. Fed to taper bond purchases by $15 billion a month as it unwinds pandemic-era stimulus. Tapering marks exit from Fed's pandemic-era policy stance. Now, this right here is something that, this is something that needed to happen. Now, depending on your opinion, this never should have happened. The Fed never should have, did the stimulus in the first place. That's your opinion. That, as a matter of fact, that's probably my opinion. However, I mean, I am glad that it's finally over. Like, this is something that I think needs to happen. Like, it needs to happen so that the market can sink or swim on its own. This is something that I'm very happy to see. The Federal Reserve on Wednesday announced plans to begin slowing its aggressive bond buying program by $15 billion a month in mid-November, so it's starting within the next 2 weeks. The first step that policymakers will take in reversing a historical level of stimulus for the U.S. economy amid a recent inflation surge. Now, I'm not going to read this second paragraph here. You can pause and read this if you want to. The point is that it's finally happening. And the Fed actually gave concrete steps on concrete, close to concrete days, mid-November. So at the middle of each month, it's going to reduce. It's going to purchase $15 billion less in asset purchases, and then a month after that, they're going to purchase 15 less in asset purchases. You know what I mean? And according to its current trajectory, English, all this is going to come to an end in mid-June, and then after that, of course, they're expected to start raising their interest rates. Now, here's the part where I admit where I'm wrong. Now, I am not, I'm not a financial expert. I'm not exactly the smartest financial YouTuber in the market. I'm just a guy. I'm not even good at this. I'm just a guy with opinions and a YouTube channel. And I don't remember which video it was, but I made a video a while back where I talked about this. And honestly, most of my information I stole off of Tom Nash, but who I believe, he's a great guy, great YouTuber and all that stuff. And my opinion was that once the Fed actually decides on this and actually gives concrete days and all that stuff that it's going to happen and actually commits to this, I figured that stocks were going to drop, especially for companies that are growing, emerging pre-revenue companies and all that stuff. And for Gevo and Hyliion, which they're both, Gevo's actually a revenue company, but it's still a growing company. For stocks that might depend on, potentially depend on loans and stuff like that in the future, I expect they would drop off. And Hyliion kind of did, and Gevo did kind of drop off. It was sporting like 1%, 2% gains earlier today, but it has not dropped off nearly as much as I thought it would. And for the most part, stocks shot up. It shot up dramatically, especially for stocks like Revolve and Tesla and stuff like that. So I've never been happy to be wrong. Now, we still need to see how this plays out because the tapering hasn't actually started. We still need to see what happens when the tapering actually starts, and how the economy responds over the month as the tapering continues. And then we still need to see what happens next year once the Fed finally hikes the rates up. So things could change, but as far as this initial response, I'm very happy. Now, obviously, this is the end of the day, Wednesday, so things could easily change like Thursday or Friday. But as of right now, as far as an initial response, I'm very happy with how things are going, and I've never been happier to be wrong. Now, as far as what I'm doing about it, since everything's doing so well, I'm not doing anything. Now, I said a few videos ago that I've stopped buying Hyliion shares, and that's gonna continue to be true until Hyliion shows some revenue. We'll see what happens in earnings next week, but I don't care how much Hyliion drops. I'm done buying shares. That's my position. If Gevo, now I'm up 20% on Gevo, so I don't expect this to drop this much, below my cost basis. However, if Gevo, if it does happen, if the market reacts unfavorably, yeah, I will load up in Gevo. I only have 2,000 invested. I would like to own more, but I'm not buying Gevo at 20% gains. So we'll see what happens. As far as other stocks, everything's doing well, so I'm holding the line. And of course, now that I said that, watch me jinx everything. But anyways, take care, have a great day, and eat your vegetables.